picture of me there, and I put that picture there because I turned 2,000 into over 100, but we'll talk about that a little bit later. If you guys have any questions or comments along the way, please feel free to post them in the chat log. I'll get to them as quickly as I can. If I don't, please just repost it later on. I will definitely save a few moments at the end for a Q&A session. Okay, so I'm glad I'm coming through loud and clear. Before we get started though, guys, as always, trading, investing in any capacity is a risky venture, right? But most of the problems with traders and most of the problem with investors is a lack of education. They simply don't have parameters to be successful. They simply don't understand what it is that they're doing specifically as it relates to money management. So you just need to understand that this can be a risky business, and there are people that do lose money. Most of them that I find that lose money are basically the ones that don't have an education, right? They just don't understand what they're doing. So it's important to understand that. But today, just to get right to it, the two things I want to talk about, and you'll notice there's two numbers on that screen, and I apologize, guys. As the screen pops up, I can't see the screen, so if it takes a second longer and I'm a little bit ahead of it, I apologize for that. But you'll notice there are two numbers there, start balance, and one is $2,165, $2,165 into 51,720. That's the 2,389%. Interestingly enough, I've done it on more than one occasion. It turned 2,500 into over 100,000. So I was actually being a little bit conservative with the opening slide. I mean, realistically, it's more like 5,000% or so. Okay, so that's what I want to talk to you guys about in detail today, specifically. How is it that I'm able to do those things? What is it? Why am I, versus some other traders out there, able to take these smaller accounts and turn them into relatively substantial amounts of money? Okay, and that's something that Live Traders talks about, and I'm going to do it again today. But before I do that, I want to see where you guys are coming from. This is a map of the traders we have around the country and around the world in our chat room. Some of these are multiple traders in one location blocked over, but a few of you guys out there, just to see if there's actually anybody out there, where are you guys coming from? Talk to me. Where are some of the locations that you guys are coming from? I'm coming to you guys today from Scottsdale, Arizona. I spend a good portion of my year there. Boca Raton, Florida. Good to see you there, B. Sully, Bico. I spend a lot of time in Pennsylvania. I have a residence there. I spent some time in Japan. My wife's Japanese, so I go there 6 weeks. I spend quite a bit of time in a lot of different places. And I'll get into that later as well, because that also lends its hand to the trader's lifestyle. You know, what are some of the positives about this business? And one of them being is you can do it from anywhere. So New Hampshire, cool. Chicago, Denver, nobody international yet. Okay. All right. Southern California, nice place. Sarasota. Well, I welcome you guys. All right. As you can see here, the Live Traders family, we have folks from really all over the world, to be honest. And that's a pretty amazing thing when you think about the technology and the internet these days, that we're able to do these things from just about anywhere in the world. Taiwan, good to see you, Mike. So again, I appreciate you guys being here. You can find us, Live Traders that is, on social media, Facebook, Twitter, Instagram, StockTwits, YouTube. You can email us at info@livetraders.com. So take a moment and maybe take a screenshot of that or write those down. Some of them are longer than others. But you can find us on all of those social media outlets. The reason I'm telling you this is we put out a lot of good free content on Facebook, on Twitter, on YouTube. In fact, we just posted a new YouTube video last night, a little bit about our mentorship, so I'll get into that in a couple of minutes. But like I said, you can find us on social media in these different venues. Now, to more specifically, who is or who are Live Traders? That's me on the left, Jared Wesley, and on the right is Anmol Singh. We are the co-founders of Live Traders. Okay, we've been doing this for a while. This is my 11th year in the trading business. A little bit about me quickly, briefly. Before I got into intraday trading, I actually spent time on an institutional trading desk on Wall Street in New York. I worked for a large bank out of college, and I spent some time on an institutional trading desk. And it's a very interesting world, but it's a very different world than what swing traders, day traders, and core traders go through. All right, just because you have that tagline, I work for Goldman Sachs or I work for Merrill Lynch or et cetera, doesn't necessarily mean you have any clue about what the markets are actually about. Okay, and that's not to knock those folks. Some people at those firms know exactly what the market is about, but there's also a lot of people that don't. Okay, I'm saying this because you're not at a disadvantage if you didn't work at a large Wall Street bank. Okay, you might even be at an advantage. Okay, so with that, all right, you don't need experience to be good at this. I want to make that very clear straight up front. You do not need experience to be good at this. Okay, and then of course the man, the myth, the legend. Many of you guys have seen Anmol Singh on his Instagram page and Facebook, etc., and so forth. He is what I would consider to be a young hotshot trader. Why do I say that? Because, well, he's young and he's a damn good trader. So he's been doing this significantly less than myself, about half. I think he's been doing this 5 or 6 years. I've been doing 11, and I have to say he's one of the best traders that I've had the pleasure to meet. And I continue to comment on this because it's unusual that somebody is as great as he is in the amount of time that he's been able to accomplish it. Okay, so I think it's pretty impressive. It's pretty incredible. Okay, so you guys can find us not only on those social media outlets, but we've also been written up in Yahoo Finance, Traders World, Reuters, MoneyShow.com, Bloomberg. I've actually done a lot of presentations for MoneyShow.com in years past. I've traded live in auditoriums for 500 to 1,000 people, account open, P&L open. So this is not new to me. I do this quite frequently. But the truth is, guys, and I don't want to get off topic here before I get in, but one of the reasons I wanted to do this today, and one of the reasons I wanted to talk to you guys today, is because I'm a little bit tired of the BS that's out there in the industry. You know, it gets a really bad rap for being, let's just say, unsavory. And you know what? There's good cause for that, right? There's a lot of shenanigans that go on out there. In fact, and OTC here and Kathy and them can confirm. So I don't do these webinars that often. The last one I did here was over a year ago. You know, so I don't spend my time doing these webinars. I spend most of my time trading. I have a healthy real estate portfolio. But between those two things and my family, that's mostly what I do with my time. But once in a while, sometimes we need to come out and kind of set the record straight and talk about important topics in trading, all right? So, again, you can check us out on Bloomberg, Yahoo Finance, Traders World, Reuters, Money Show, etc. Over the summer, we had what I would consider to be a fantastic mentorship in New York City, and we just put this video up last night. That's the video I was alluding to a few moments back, okay? This is a really good snippet. It's only about 2 to 3 minutes. It's not a long video. Maybe Anmol has the link to that. You can put that in there, okay? And it talks a little bit about what we did and how we traded with our mentors. We had a nice, quaint group of 7. That's all. We max out at 7. We don't allow more than that. So you might want to get your reservations in for next year. So we only do 1 a year, and we only allow 7 students. And it sold out in literally 2 days last time. So if you're interested in that, get an email into info@LiveTraders. But that's a nice little 2 to 3 minute video. If you watch that YouTube video about what we did with our mentorship students, we visited the New York Stock Exchange floor. That's a picture that I took from above. We went down. We talked to some of the pit bosses and the traders, and learned a little bit more about high-frequency trading and all the other stuff out there that people are talking about these days. You know, HFT has been a hot topic in the news the last couple of years. And they had a genuine blast, all right? You can see our group at the bottom here, and there's Anmol and myself in the middle. World Trade Center had an awesome dinner at Delmonico's, a beautiful trading office there in Manhattan, near Battery Park, the financial district, et cetera. It was a fantastic experience, okay? But the question is, what is it with traders, okay? Why is it that traders struggle so much? Everybody continues to search for the Holy Grail. So we're going to talk a little bit today about, well, how do you make money as a trader? How did I make 2,389%, okay? Because this, honestly, that's the average trader out there. The public's out there throwing darts at a board, sport. I don't throw darts at a board. I bet on sure things, okay? And that's the God's honest truth. Now, do I know if a trade I'm in is absolutely going to work or not? No. But my management allows it not to matter. My management allows it not to matter. The problem is most traders are throwing darts at a board, sport. You don't want to be throwing darts at a board, okay? So there's multiple aspects to success in this business, okay? One of them is understanding and learning the technical side, okay? What is a wide range bar? What is a bottoming tail? What is support and resistance? That's the technical aspect of this business. But what's equally important to the technical side of the business is the emotional side of the business, the money and trade management side, which has nothing to do with whether the stock works or not. It just has everything to do with what your rules are and how you approach it, okay? So when I say that, guys, the vast majority of traders that fail, and I'm going to get into the charts here shortly, the vast majority of traders that fail because they have no clue how to manage their trading account or how to manage an individual trade. I'm famous for saying, God, he can't trade his way out of a cardboard box, okay? Well, I changed that to he can't manage his way out of a cardboard box, okay? Most traders I see are in trades that are good enough to win. They just don't know how to manage them like a winner, okay? You don't have the emotional control. So we're different at Live Traders, guys, because we only use technical charts, okay? I don't use news. I don't use fundamentals. I don't even use indicators, okay? I do not use indicators. I'm going to repeat that. I don't use indicators. There's 300, 400, 500 indicators out there. I don't use them, okay? Guys, I don't use them. I have candlesticks on my chart and I have volume on my chart. I don't have a relative strength indicator. I don't have a COM channel index, okay? I don't have trend lines on there. I don't have stochastics or Fibonacci's or any of that stuff. You just don't need it, okay? Now, I'm not knocking somebody that might use one or maybe two, but if your charts look like spaghetti and there's lines everywhere and you have no idea the direction, that's a problem. I keep things very simple because the only thing that matters is price and volume. The only thing that matters is price and volume, and then let's throw in discipline. Price, volume, discipline, you're a money-making trader. Price, volume, discipline, and you make money as a trader, okay? I don't care about the news. I always take my stops. I don't ever let a stock go past it, ever. So I don't care about those traders out there that want to talk about, well, it's a soft stop. Oh, well, I'm going to give it a little more room. That's a bunch of BS, okay? You take your stop. You put it in that area for a specific reason. If it hits it, you move on. Next. You notice I'm a very disciplined trader, okay? BICO, I apologize if it's BICO or BICO, but I know I do not. I know Unmall and J-Trade options. I do not trade options. Nope. The one thing I've been getting into lately is Forex, but I'm very new to Forex. I mean, literally new as in the last several months to Forex. That's Unmall's specialty along with stock and options. I track all my trades, guys. When I say we, I'm talking Live Traders as well. I don't trade for ego. I trade for money. Why would I put something like that in there? It's a bit of an arrogant statement, isn't it? I put it in there because too many traders trade for ego. Why did you wake up this morning? For the action or for the money? Ask yourself that question. I'll repeat it. Why did you wake up this morning? For the action or for the money? I wake up for the money. I don't wake up for the action, okay? You can go jump off a bridge, or you can go to Las Vegas, or you can do a lot of things, you know, for action, okay? We do it for money, all right? There's probably a lot of cheaper things you could do to get action than trading if your ego is what rules your roost, okay? I'm not perfect. I stop out on just as many trades as I win on. I stop out on just as many trades as I win on. It's not on a loop. 50% batting average, good month, 55% batting average, okay? I stop out on just as many as I lose on. How do I make 2,389% then? Trade and money management, but there's more to it, okay? So I focus on what's important. That's the only reason we make money, is because we focus on what's really important. Everybody tells you that, but they have some fancy indicator they want to sell you. I just use good old-fashioned 30, 40, 50-year-old technical analysis. Candlesticks and volume, baby. That's it. That's all you need, okay? You can check that out, guys, on our website, livetraders.com. We have a lot of testimonials on there if you want to hear from our traders, stop by our chat room, et cetera, and so forth. Really good story here with Taylor Patrick. She's one of our clients, and you can go listen to her on the website. It's about a 2 or 3 minute clip. Well, there, it's only a 1.5 minute clip about how she went from selling protein powders and other healthcare products to doubling her income as a trader. So a pretty impressive story. Who's somebody that's young, I think she's 25 or 26 years old, has no prior experience, anything related to finance, let alone trading, nothing. Like, could barely balance a checkbook, and has become a successful trader. Why? Discipline pays. Okay. So let's get into the meat and potatoes, guys. All right. What I'm about to show you next, in my opinion, okay, now remember, everything I preface by saying you have to use good trade and money management, right? If you don't have good money management, you're going to blow up your account anyway. I don't care how good the technical pattern is. If your money management stinks, what that means is if you're a new trader, okay, and you're risking thousands of dollars per trade, you're an idiot. Yes, I'm that direct. You are stupid. So if that's you out there, I'm speaking to you. I don't care if your account's $1 million or $1 billion. You don't know what you're doing yet. That's like saying, I've never driven a car before. I'm going to hop in a Ferrari and just smash the pedal to the floor and see how it goes. Well, that's foolish. That's not very bright, is it? You might want to learn where the brake is first, how to drive a car before you go fast. Trading's the same. You might want to learn what it is that you're doing, why it works, why it doesn't work. Risk $5, $10, $20 on a trade, right? Then when you're wrong, and I didn't say if you're wrong, I said when you're wrong, because you will be wrong, you don't lose much money. You might lose a few $100 over the course of a month. No big deal. But you're not blowing up accounts. People that blow up accounts, they have no idea what they're doing. Okay, they have no idea what they're doing. Because a good, solid, consistent trader should never blow up an account, because you should never be raising your risk unless your results prove that you should. Does that make sense? So if you're winning over the course of a few months, you slowly raise your risk. You slowly raise your risk, right? You don't jump from a big wheel bicycle into a Formula One car. There's a few steps between, yes? I use car analogies because I love cars, right? You get on a little 3-wheel, big wheel, you don't jump from that at 3 years old to a Formula One car. No, there's about 10 steps in between. So why do traders not do those steps? So let's soften it up a little. Let's talk more specifically about today's topics, okay? Pre-market charts. This is what I want to talk to you guys about today. To me, how long are you in a trade generally? It depends. I'm in a trade from 1 minute to 2 hours. 2 hours would be a very long time. Do I go short? Yes, I do. I'm probably long 75% of the time, and I short 25% of the time. Just as a quick side note, I don't really care whether a stock is long or it's short, as long as it makes money. I can't stand these traders that come in here and say, I actually prefer to short. I'm like they think it's some badge of freaking honor. You go long, short, who cares? You make money. That's all that matters. Like it's special to be able to short a stock or something like that, right? You go long, you go short, you make money. Doesn't matter. All right, pre-market charts, guys. I'm bringing this topic up because for me, it's a foundational point of my success as a trader. I trade no more than 60 to 90 minutes a day. I'm in front of my desk at 9 a.m. I'm done trading by 10 to 10:30 most days. If I am still trading after 10:30, I'm simply waiting for a stock to hit target or stop me out. Meaning I'm already in the trade, I'm just waiting for it to finish. Okay? I very rarely even enter trades past 10 or 10:15. Most of my trading's in the first, I would say 5 to 15 minutes of the day. I average 2 to 3 trades a day, occasionally 4 or 5. Today I took 4. Okay, today I took 4. I took FFIV once for a winner. I took sell today for a winner, and I stopped out twice, not once, twice on QCOM. 50% batting average today. Still a good day though, because my 2 that worked got 2 to 1, and the 2 that lost didn't, right? They lost 1 to 1. So one of the reasons I'm able to be aggressive, okay, and the reason I'm able to take advantage and not trade all day, okay, is because of pre-market charts, okay? So I want to go over some of the benefits of those pre-market charts, okay? Those pre-market charts help traders stay out of stocks that will likely pull back at the open, right? Don't you hate, isn't it like, and I'm just going to skip ahead and I'm going to come back. Isn't it the single most frustrating thing in the world as a trader to scan pre-market, okay? Scan pre-market, and then as soon as the market opens, okay, boom, the stock is gone. It's up $3 in the first 10 seconds, okay? Isn't that frustrating? Guys, give me 1 second. I'll be right back. Give me 5 seconds. I apologize for that, guys. I'm back. There's nothing to me that's more frustrating when I spend 30 minutes from 9 a.m. to 9:30 scanning for my absolute favorite ideas. I mean, the best of the best. And you put them in a list, and you're like, wow, that stock is awesome. That gap is great. And you have 4 or 5 there. You're honed in. You're focused. You're ready to go. Market opens, gone. And you're like, are you kidding me? I just watched that thing for 25 minutes in the pre-market. I knew where I wanted to get in, and the thing just took off. Why? Because you were too scared to get in at 9:30 or 9:29 or 9:31. Okay? So nice gap over a double top into void above. This is a top watch list idea, right? You can see the resistance right there. Okay? Boom. It's 2 minutes into the day, and you've already missed the best trade of the day. The thing went $7. And that's what you do. You put your head in your hands, and you're like, oh, my gosh. So how do I mitigate this? Well, I use pre-market charts. Okay? So they do several things for you. They help traders stay out of stocks that will likely pull back at the open. Okay? They help traders get into stocks earlier than normal. Okay? And by getting in early, we can better take advantage of the entire move, not just the already extended pullbacks or consolidation. Now, I'm not saying it may never give you another entry. It may. I mean, you take a look at this pre-market chart. It popped, pulled back, and then gave you a buy setup. But by that time, I mean, you're already up $1.50 on this. You've given up all that money, right? You could have bought it down here and then bought more up here instead of just getting in for the first time up here, right? So what I'm going to say next, in my eyes, is profound. You may not think so, and it's so simple. I treat pre-market charts with volume. They have to have volume. If it does 100 shares, that's not volume to me. I treat pre-market charts with volume, okay, just as I would treat any other chart throughout the day. See, most of you guys before 9:30, you don't look at those charts as being meaningful. You only think meaningful charts happen at or after 9:30 a.m. Why? Does this stock traded a ton. That's 9:30 a.m., that bar right there. Why is this not meaningful? They're real people taking real trades with real money, and the real institutions backing it. Why is that not important? But traders don't think it is. The average Joe Schmo trader doesn't. They don't even look at pre-market charts. It's super important. Okay? So I treat pre-market charts like regular charts. Extended move, I wait. Non-extended move, enter immediately, assuming it has a nice gap. Only trade quality. I would use the same criteria as I would to trade at any other time of the day. If you're trading at 10 o'clock, I use the same criteria as I do at 9:30. The only difference is at 10 o'clock, you have 9:30 to 10 o'clock market open time. I look at 6:30 to 9:30, 9:29, whatever you want to call it. I look at this. This is real trading, okay? Real shares being printed, okay? So it's such a simple thing, but for whatever reason, traders just don't look at it, and I don't know why. Okay, I'm not really sure, all right? The problem is sometimes you get enamored by a gap, and you want to enter immediately. Wow. It also helps us stay out of stocks. I'm going to show you some of that too, right? Sometimes you'll have a straight-up move in the pre-market, and you go, wow, it's a great gap. And then it pulls back immediately at the open. You're like, what happened? Well, it's because it's tired. It went straight up pre-market. Now, on the flip side, not everything is perfect. Okay, they don't all finish out this way. Sometimes, right, pre-market trading is not an indication of where a stock will eventually open, right? Sometimes you see this pre-market base and it tanks at the open. That happens occasionally, all right? Occasionally it does. Keep in mind also, and this is an important one, maybe the most important one, you know, getting in any trade in the first 1, 2, 3 minutes of the day, stocks are whippier, right? They're spreadier, they're wild, they're more wild, wilder if that's a word, right? They're wilder in the first few minutes of the day than they are an hour into the day. But that's also a benefit. It's a drawback and it's a positive. It's a positive negative, right? The spreads are bigger. The bid and the ask spread is bigger, right? But the moves are bigger too. So I might need a slightly wider stop, but the move is bigger as well, and they happen much, much, much quicker. Okay? So in my opinion, despite all of this, the advantages far outweigh the drawbacks. Okay? We're not randomly trading stocks. We're systematically trading stocks. I'm looking for specific patterns. This is clear as day to anybody out there. That's a consolidation breakout back to the rising moving average, right? The moving average is the only indicator that's in any book that we teach. I personally don't use them. I put them in here because Anmol asked me to. He said, Jared, well, we do teach moving averages. I said, yeah, that's true, but I don't use them. He said, well, I do. And he's right. He does use them. Okay, I don't use moving averages, but you can if you want. That consolidation breakout is incredible. Why would I wait for the market to open, or why would I wait 5 or 10 minutes into the day? I'm going to buy it whenever it breaks that area, whether it's 9:29 or 9:32. To be honest, I do prefer to wait till 9:30, even if it's only 1 or 2 seconds into the day. I do prefer to wait till the ding-dong of the bell. Okay? Why are more people not using pre-market charts? Okay? Isn't this annoying? Nice gap up. You're going, hey, you're telling the whole world, hey, I'm getting ready to trade this stock. I'm going to go trade Apple at the, when the market opens, or I'm going to go trade Apple today, and then it does this, and you're like, oh, man. So let's take a look at some, okay, specifically. All right? This is CRE, 5-minute chart at the open. This is market open only. See it? 9:30 a.m. As soon as the market opened, CRE popped. Oh, what is that, about $2, $1.80, something like that? CRE right there. The only potential entry on this was maybe here at 65, maybe 66, maybe. And now you're really aggressive. The stock's already up $4 and you want to get a new entry. There's the 15-minute of CRE. I mean, my goodness, this stock went to $70 that day. So it's another nice gap that shoots higher as soon as the market opens at 9:30, leaving traders frustrated, and then they chase. Now, in this case, it ended up going higher, and you probably would have been okay. But a lot of times, they'll go $3 or $4 and then pull back, and you miss the move, and you end up chasing it. But you have an immediate pop literally in the first 5-10 minutes of the day. How can we mitigate this? How can we get a better risk to reward? How can we get a better entry? How can we take this gap that we really liked and not miss it? That's how you do it. Take a look at the pre-market consolidation and go, wow, that looks really good at $63. Okay, that's my order, all right? Okay, that's the trade. 63.03, I'm out for a quick 35 cents. Truth is, I wish I would have held it. It went $7. Could have made 20 grand on this thing, right, if I held it for $7. But that's not how I trade. I trade for 2 to 1. 2 to 1 done, 2 to 1 done, 2 to 1 done. That's it. I lose 1 on my losers, I win 2 on my winners. I lose 1 on my losers, I win 2 on my winners. Okay? 2,389%. And that was the bad year. The good year was over 5,000. I'm going to show you that in a few minutes. Okay? Here's another example. Okay? Here's Taser. All right? Beautiful pre-market consolidation. Pre-market, guys. The market has not opened yet. This is from, you can see the timestamps. It's from 8:32 in the morning to 9:30. Just sitting in a range. Now, if you had seen the same consolidation at 10:15 in the morning, every trader in here would jump on it at $23. But because it happens from 9 a.m. to 9:29, you're all scared of it. Well, again, it's not spots and dots like it is over here. It's actually trading good volume, right? So I'm going to get in this thing right at the market open, okay? Most of the time I use a stop limit order to get in Wilt. Any relation to Wilt Chamberlain? I'm just joking. He's my favorite basketball player. I do occasionally use stop market orders, but at 9:30 in the morning, I generally prefer not to use stop market orders, and the reason being is the spreads on a lot of these are pretty big, and every once in a while you'll get like billed 50 cents late. Now again, that's not on all stocks. I mean, a $23 stock is not going to have a 50-cent spread, but Amazon will at the open. I mean, you guys see Amazon at 9:30 in the morning. It's got a $1.50 spread. So I typically use stop limit orders, and the reason I get filled on them is I anticipate them. I usually get in a couple pennies before it breaks. So instead of getting in at 23, I'll put my order at 98. And even when I do, I still get filled late occasionally, 03, 04, 05. I even got half my shares at 09, right? But you can see, I mean, there's the order ID number. A lot of people put all this fake bullshit out there, excuse the language, but I put it up there for you. But 9:30 in 7 seconds, that's when this order triggered. The order was in as soon as the market opened. At 9:30.00000, the order's in. It triggered 7 seconds later. Guys, I was out of it and finished, done, finished in 3 minutes. 3 minutes. 3.5 minutes. Done. Look at this thing. I mean, it went from 23 to 24. I'm putting my stop here at 22.80. Maybe you could go 22.75 under the whole thing if you wanted to, right? Maybe you could do that if you wanted to. Just a quick $400 or $500 risk, couple thousand shares, no big thing. Boom. You know, you get your quick 40, 50 cents out of it, make $1,000 and you're done in literally 3, 4, 5 minutes. Okay? Well, rub it in, man. Really? You had to come in and say that, steal my thunder like that, Anmol? This is what I mean, but this guy being just a, you know, a beast, trading beast. If it gaps, would you not get a good price, right? If it gaps. Tom, it has already gapped. Does that make sense? I'm looking at stocks that have already gapped. Does that make sense? So when you take a look, for example, hold on, let me go back up. You see this stock? This stock has already gapped. See it right there? It has already gapped. Take a look at the entry. Hold on. See it? Just take a look. You're 60 there. You're 65 there. Right around 62 to 63. The stock has already gapped. See, it's already at $63. I'm not buying this and holding it overnight. I don't ever do that with earnings. Ever. Ever. Even with swing trades. If it's an earnings, I get out of it. Core trade, I'll hold it. Swing trade, I will not. So no, I'm not getting a good price because I'm waiting for the stock to gap up. Like after market, I think Amazon is reporting, right? So tomorrow I'm going to check out Amazon and see where it gaps to. If it has a really nice pre-market chart, I'm going to trade Amazon at 929, 930, 931, something like that. Now, I have no idea if Amazon will be good tomorrow. It may look like crap. I have no idea. But if it looks good, right, it has this beautiful consolidation I'm looking for, I'm going to get in it. Guys, 9:30 in 7 seconds. Okay, I just want to make sure the order ID is right there. Okay. Here's another example. Note, and this is to you, Tom, there's a gap over a red bar, over one pivot, over two pivots. So a beautiful gap over a red bar, multiple pivots, very clean pre-market base that triggered at the open. Okay, so I'm liking this gap. I don't even know what the pre-market chart looks like yet. I just know this stock is gapping right to the tip of my cursor. See where the tip, just above the red line, I know it's gapping right there. So I look at that gap and I go, that's a pretty nice gap, right? That's a really nice gap. Can I get in it somehow? Is there a better way for me to enter this thing? And then I look at my 5-minute pre-market chart. Now notice, see all this stuff here, guys? That's spots and dots. I won't trade something that's spots and dots. It has to actually print volume, and it does. Okay, 82.50. You're going to buy it right there as soon as the market opens. You're going to put your stop at 82, maybe even 81.50. Okay, and that's a bit of a wider stop, but you can put it all the way down at 81.50. I tend to go for the tighter stop. Okay. So I got a 50-cent stop loss, and guys, it goes to 84. It goes 3-to-1 in 5 to 10 minutes. If you're ready to sit through the pullback, it ends up going to 84.70 or so. So it goes $2.20. Remember, just looking for 2-to-1. I lose 1 if I stop out, and I win 2 when I win. It's as simple as that, right? Simple math. Okay. Here's another nice gap. Stock gaps over a red bar, over a consolidation. This is perfect. Like, you salivate for this type of a gap. Now again, we have gap strategies as well, and we teach about what a nice gap looks like versus not a nice gap, a level 1 gap, a level 2 gap, a level 3 gap. But that's not what I'm here to talk about. That's a nice gap. You'll have to trust me on it. And then look at the pre-market chart. Beautiful. Right there at the open. So you're going to get in at 12. Put your stop under here. Okay. 1175, 1180, boom, goes over $1. Just the first 6-7 minutes of the day, the thing goes 70 cents. Okay? Now, some people ask, well, how do you do that? I'm going to give you a big picture of it. Okay? This is exactly, I'm going to make this very clear, this is exactly what I look at in the morning. Okay? All right. That's my list of dollar gainers, dollar losers. This happens to be dollar gainers list. So I go over this list. It's a pre-populated list. It means all the stocks in order from the highest dollar gapper to the lowest dollar gapper. And I go down the list, and the ones with big volume stand out to me. I don't have time to get into all the details with that, but the ones with the big volume, they stand out. So I look at FIVE, F-I-V-E. I go, wow, 76,000 shares for this stock, this junky stock. That's pretty good. So now I look at the daily chart. I look at the 60, and I go, the daily chart has room from somewhere around $34 to $44. See that? The red lines, the void, that little channel in there? Okay, all right. I'm going to get to that, Tom. I'm going to show you exactly how I did it, okay? These are the patterns that I used to do it. I'll show you the account in a minute, okay? You see this, guys? I know this has a tradable void from 34 to 44. That's how much room it has. I'm not swing trading it, so I don't need $10. But I know it's got the room. So now I want to know, okay, more specifically, what does it look like in the pre-market? Well, there's the gap up, okay? This is all pre-market right now. The market has not opened yet. Okay, that's why I took this picture. The market has not opened yet. I have the tradable void. I have the 60-minute up in this area over this prior pivot. Okay, now I want to look at the 5-minute. Go, wow, look at that 5-minute pre-market sitting at 35, 35, 35, 35, 35. Well, I know darn well when 9:30 comes around, probably going to be hitting this thing at 35 bucks. I'm going to be hitting this thing at 35 bucks. Okay? Make sense? That's a pretty simple explanation, guys. It doesn't have to be rocket science. These are things that we cover and things that we discuss in professional trading strategies, guys. There is an entire chapter, right? I might go over 5, 6, 7 slides with you. There's an entire 40, 50-page chapter on pre-market charts in professional trading strategies, guys. It's a book that I wrote that's 460 pages, okay? 16 hours of video that goes with it, of me explaining each and every page, okay? It's the most comprehensive, complete book, course, manual in the entire industry. Everybody tells you that, but they're full of shit, okay? You'll see. It's the most complete manual in the industry. Why? Because nobody else talks about pre-market charts. Nobody else talks about trade fees, commissions. Do you even know what a Section 31 SEC fee is? Nope, but you're paying it every damn trade you take, though. You don't even know what it is, do you? 1% of you in here know what that is, but you're paying it every day. You didn't even know it. That's in the book, okay? How to get filled on trades. You know why? Because one of my pet peeves in this world, in this industry, one of my biggest pet peeves is when manuals teach theory and it doesn't translate into reality. Oh, just buy Google at this price and sell it here. Well, do you know that Google's got a 60-cent spread? How are you going to get filled at that price with a 60-cent spread? You don't teach the people that, though, do you? Well, that pattern's as good as crap. Why? Because if you can't get filled on it, you can't make money on it. Tell me I'm wrong. If you can't get filled, you can't make money. It's a shocker to new traders. They take a course and they're like, well, gosh, reality's a little different than that manual suggested. That's right, it is. Right? So you need the education, but you also need market experience. And like I said earlier, that market experience has to come at low risk levels when you start. $5, $10. You earn the right to raise your risk. You don't have a right to risk a lot of money when you start trading. Okay? This is reality trading here, guys. All right? Not some fantasy land. Here's another example, guys. I'm showing you this example, all right? And this is relatively new. This is about a week or two ago. Because this is a pullback. Everything you've seen up until this point has been breakouts, consolidations. This is a pullback. Now, I put this in here, this stream in here, because I want you to see that this isn't some elusiveness. This is something I put out there long before. So at 9:18, guys, 12 minutes before the market ever opened, okay? Ulta, favorite idea, over 247. Can you see what I like about it? The daily gap right here over the consolidation with room to move higher, right? The stock moves up in the pre-market and pulls back. I'm looking at that area going, wow, if I saw this at 10 a.m., I would buy that buy setup. So why isn't it good enough if I see it at 9:15 a.m.? Well, the answer is it is. It's plenty good enough. It's printing hundreds of thousands of shares here, okay? It is plenty good enough. And there it is again, 927 in the chat log. Ulta over 246 to 247, right? Because it was such a spready stock, all right? I liked Amgen as well. I expect Ulta to be insanely spready / whippy. You can see I'm typing these in to let our traders know what I'm thinking, all right? On StockTwits, really liking Ulta over 246, 247, 6:28 a.m., 6:19 a.m., my favorite. There's Ulta again. Okay, I don't just decide on this at 9:29 and 59 seconds. This is something you build up to. You look at them in the pre-market, right? And you have 10 stocks, and you dwindle them down to your 2 or 3 favorites. And Ulta was one of them. Obviously, Amgen was as well that day. I'm looking at the daily chart. I'm looking at the pre-market chart. And guys, what happened? Guys, this, by the way, that's pre-market. Okay, that's a 15-minute pre-market. Why did I say that to you? Because most of you are looking at this and you thought it was real time. See, this looks a little bit like pre-market, right? A little bit of spots, occasional dot in there, not right? It kind of looks pre-market. This doesn't look pre-market. That looks like past 9:30. It's not. I just changed the time frame to a 15-minute from a 5-minute. So if I covered that up, if I covered the time at the bottom there, if I covered the time up and told you, hey, check out that buy setup on Ulta on the 15-minute chart, you'd sit there and go, yeah, nice buy setup, Jared, sweet trade. You didn't even know that all this, these 3 red bars, that's before the market ever opened. It's pre-9:30. This green bar, it's pre-9:30. You didn't even know it. Boom, gone. Guys, $20. $20 move. Now, in hindsight, you can all say, oh, I would have bought that 3-bar play right here. Would you have after it popped $10? Would you have bought it after a $10 move? Doubt it. Maybe. Maybe some of you would have. So you're looking at this, stops 245, you're getting in at 246, maybe 240, let's call it 247, $2 stop loss. The first 5-minute bar went up $8. The first 5-minute bar, and you're already up 4 to 1 on your money. Good stuff, right? Here's another one, but let's look at the difference. On this one, I really like the gap, right? I really like the gap here. But there was literally nothing in the pre-market. I think it printed 150 shares, if I remember correctly. Literally 150 shares. So I thought, well, there is no pre-market chart here, right? Guys, that happens sometimes too. Sometimes there's no pre-market chart. I can't trade it at 9:30 if I don't have any information. Does that make sense what I'm saying? If there's no pre-market chart, like this is easy, right? Because now I have pre-market information. There's actually pre-market trading. I know that that's a pullback buy setup. There's the 15-minute pre-market. That's a pullback buy setup. But here, there was no pre-market information. Nothing. 0. 100 shares printed. I don't have a pattern in the pre-market. I have to wait for the market to open. And you know what? It ran up. And it's a shame because I would have liked to have been in at 9:30. But like I said earlier, we're not gamblers, guys. We're pattern traders, right? We're system traders. We methodically approach the market and look for specific patterns on specific gaps for specific results. If you don't get it, you stand down, right? If you don't get it, you stand. Doesn't mean the stock won't go higher or lower. It just means that you're not going to be in it because there was no reason for you to be in it. It didn't have a pattern, okay? I end up buying the pullback right there, 50.84 at 50.73, okay? Took 5,000 shares of it, as you can see right there, 10-cent stop, $500 risk. I made $1,000, 2 to 1. Guys, notice I said I typically have a 50% batting average. Well, there's a full stop. Minus 400, $500, okay, KSS. 2 to 1 winner, 2 to 1 winner. That was break even. Okay, so Moss was break even, nice, okay? 2 to 1 winner, minus 1 loser, 2 to 1 winner. So on that day, I made 3. If I'm risking $500, I made $1,500 that day, and that's after fees too. It says close P&L, and then it says with commissions. Okay, that's it. 2 to 1, 2 to 1, 2 to 1, 2 to 1. Okay, here's the thing, guys. All right, this is what people see, and I'm not going to lie. I put that stuff out there on social media too. Why? Because it brings attention, right? Anmol and I just had this discussion yesterday, and somebody had sent us an email and said, man, why do you, some people call it trader porn. Why do you guys put all that stuff out there? He said, because we've tried putting the other stuff out there, the normal stuff, where people see you trading, or the boring life of a trader, right? People have this idea that a trader's life is super exciting and you're just, flying around the world all the time, and it can be, and it is exciting at times. But good trading is boring, okay? But yet, people respond, when I'm out in the jet, or I'm in the Ferrari, or I'm having a seafood tower, I'm at the stock exchange. People respond to that, okay? You ask yourself why you respond to it. I don't know, all right, but you do. And I have emails to prove it and sales to prove it. People do. I'm just being straight with you, okay? So are all of these things possible? Yes, they're possible, but it's a hard road to become a great trader, guys, okay? Penthouses, nice offices, home movie theaters, all of these things are nice. Vacations in Atlanta, spending time with the family, it's wonderful. These are the perks of being a great trader, okay? But it's a pain in the ass to be a great trader. It's not easy, right? It takes hard work, a lot of frustration and struggles to get there. I've been doing this a long time. Like I said, I cut my teeth on Wall Street out of college. All right, that was 20 years ago. All right, maybe not 20, but a little less than that, okay? Didn't happen overnight, all right? But you can have a great lifestyle. You can travel around, okay? And you can spend time with family in beautiful places like the Bahamas and have nice whiskey and all those funny things. Because, people like nice things, I guess. I do too. But it's not going to happen overnight. And it's not going to happen just because you see a picture of me doing it, so all of a sudden you're risking $1,000, $2,000, $3,000 a trade now. Ooh, well, I need to have that jet, or I need to have that car, so I need to go risk $5,000 on a trade. It's your second day in the business. That's just dumb, okay? That's just crazy. But the problem is so all these websites are pitching to you, right? So that's what you believe. I'm here to tell you it's a little different than that, okay? So education is the problem. Experience is the problem. It's not money. And now the next couple 3 slides, you're going to see what I mean, okay? You've been waiting for it, and I'm going to show it to you, all right? Never stop learning, because life never stops teaching, all right? Money is not the problem, but most traders make it a problem. Right? You don't need $25,000 to trade property. You don't need $50,000 or $100,000. What you do need is education, discipline, and right? Education, discipline, and consistency. Don't trade above your experience level. Trade small until you've shown consistency. Don't trade spready and whippy stocks that could hurt you when you don't know your level 2 or you don't know your platform. Guys, I've traded on a lot of platforms through the years. The first few weeks, first month of using a new product, a new platform, is confusing at times. Right? I don't know how to place a bracket order or place a stop market order, or something's different about it. And you get in a trade like Google and you have 500 shares of it or 1,000 shares of it, and you're going, shoot, I don't even know how to get out of this thing. I'm stuck. Well, that's foolish. 1, you shouldn't be trading those stocks till you understand your platform. And 2, you shouldn't be risking that kind of money to begin with until you've earned the right to do so. I don't overtrade or revenge trade. If I stop out on the stock, oh well. I took Qualcomm twice today. I felt both entries were quality. Both stopped me out. I didn't sit there and try to get my money back from QCOM. I moved on and said, you beat me today, QCOM. You got me. Tip my cap to you. I'm moving on. All right? Sometimes you just tip your cap and say, nice play. Right? You hate it in football when you see it, but sometimes you just say, nice play. That's what good trading's about. Tip your cap and move on. Don't marry a stock. Don't marry a bias. Resist the urge to get your money back. You have to think clearly and objectively, which is very hard to do. We call it mindfulness. The ability to be objective in the moment, mindfulness. Basically, it's like stepping outside of your body, looking at you and going, you're acting like an idiot. Stop it. Most people can't do that, and that's why you hear the horror stories about traders, okay? Guys, I put up quarterlies here, okay? All right? 12, I just thought, oh, every single month is a pain in the ass, okay? This is my account, all right? There's the 2,100 into 51,000 to 2,389%. Okay, there's my account number. All right, it's January. There's May. There's August. Okay, thanks, man. Okay, you'll note. Okay, and I always find myself crunched for time at the end. It's always interesting. All right, I'm probably going to go 5 minutes over, Kathy. All right, one thing I want you to take note of: $2,165.74. Do you notice my trades and my winners and losers weren't that big? So when you guys think, well, how the heck did you turn that into 50 grand or 100 grand? How'd you do it? The answer, slowly, slowly. The first quarter, the first 3 or 4 months, you're not making crap for money. $1,000, I mean, percentage-wise, that's a great month. That's 75% return. But at $1,400 is dog shit. It's not a lot of money. But by the end of the year, you're making 12 grand a month. Why? Because the account can afford it. I never risked more than 2 to 3% ever on a trade in this account. Never. I want to make that clear. I never risked more than 2 to 3% ever on a single trade. Okay? That's the key. Money management and trade management. You notice the account grows, you can risk a little bit more. You keep that 2 to 3% consistent, and it grows and it grows and it grows. Okay? But in the beginning, the first 1, 2, 3, 4 months, you're not setting the world on fire, guys. You're literally just trying to build that account up till you get about 10 grand in it. And once you get to that 10 grand mark, so boom, you know, you can start making good money on $300 risk. You know what I mean? You can start making really good money at that. But at $25 risk or $50 risk, you're not making a ton of money, but you're building your account up, okay? You're building your account up. 4,471%, 2,389%, 723%, okay? $2,200 into 95 grand, 21 into 51 I just showed you, 13 grand into 95. You don't need a ton of money. Now, would I recommend you not starting an account with 2 grand? Yes. That's not a lot of leeway for a brand new trader. The biggest problem, let's just call it what it is, guys, okay? The biggest problem with new traders in small accounts, $2,000 to $3,000 accounts, are platform fees. You're paying $200 to $300 a month for your platform, and you only have 3 grand in your account. You're paying 10% every month in platform fees. That hurts, right? That hurts, okay? How do you get around that? You have a prop account, as it says, prop reports, or you join a corporate account program that we have here at Live Traders. It's become insanely popular, our corporate account program, simply because you don't have to take a Series 56 or a Series 7. We don't lock your money for a year and all that. In fact, I don't even know if we have space left. I'll have to ask Anmol, because we put up our own money in the corporate account program, and we've had such a huge response over the last 9 to 12 months. I think we've run out of spaces, actually, in it. But you can see the returns, guys. They're incredible. And yeah, you can get these things. This book, guys, Professor, isn't that so gaudy? I love it. It's just so gaudy. When I was taking the picture, I was like, wow, this is just so brash, but it's just wonderful, right? So do you violate the pattern? No, they wouldn't allow you to open the account if you did. Right? No. Prop trading is a different topic. I don't have time for it. I only have about 10 minutes left, 15 tops. Prop trading is a different topic. It's where you don't need $25,000 to trade, and you can get around the pattern day trading rule. Most folks will need a Series 7 or a Series 56 for that. But like I said, in our corporate account program, we do not. But that, again, that's a different topic, and maybe Anmol can explain a little more to you in private messaging or something. I don't. I'd like to, but I don't have the time. This is professional trading strategies, guys. All right. These are the patterns and techniques that I've used, okay, including pre-market, all right, including money management, including trade management, including psychology, including talking about trade fees and commissions. Those are all the types of topics that are in this book. It's 460-page electronic manual plus 16 hours of video, where I'm talking and going through it. This book you see in here, I'm offering today as a bonus. I don't give this book out. I'm offering it today to folks that purchase this course, Professional Trading Strategies. Like I said, you get an electronic manual with the course, but today I'm going to throw this in, okay? Guys, people don't do this stuff, man. I've been doing this long enough, okay? I've been doing this long enough. I mean, those are tax returns right there. Okay, people don't do this stuff, you know. Those are our trading checks. Blew up the numbers so you can see them. People don't do this stuff. Okay, this is why I was telling you earlier. I'm just tired of the BS I see out there. People pitching. Now, am I partially to blame myself? Sure. You know, I put a lot of trader swag out there too. It draws attention. You know what I mean? But when you come into our chat room, okay, when you come into Professional Trading Strategies, I'm going to give it to you straight like I did today. Okay, I'm going to give it to you dead straight. And sometimes people don't like to hear it as straight as I give it. All right, because the straight way is the tough way. It's called tough love. Your parents probably used it when you were a kid. Okay, I get you in on the swag, and then I smack you over the head with reality. Okay, all right. No, that's per trade, Steve. Right, that's per trade. All right. Okay, and that was my worst loss. You're absolutely right. This is a good catch, by the way. That was in January, correct? See, I already know it off the top of my head. I remember that day like it was yesterday. So again, you see the swag and you're like, oh, that's pretty sweet. But once you come into the course, guys, once you come into the chat room, it's reality-based, okay? We talk about getting filled. We talk about spreads, all right? We talk about the commissions and the platform fees, okay? I show you the slippage. I trade with my account open every day, guys, in the chat room, every single day. You can ask the traders in here that are in our chat room, okay? You can see the number, all right? If you want to be a successful trader, I'm going to tell you a few things. It's going to take time. It's going to take effort. And you have to be objective and disciplined. And I'm not the type of person that's going to sugarcoat it for you. If you want that, go somewhere else. Okay? If you just want to feel good all the time and somebody lies to your face, go somewhere else. This isn't the place for you. Okay? This is a no-holds-barred business. Okay? You're going up against Goldman Sachs and Merrill Lynch and all these other companies that don't give a shit about you or me or anybody. They just care about one thing. It's called money. And they'll do anything they can to get it. Ask me how I know. I worked with these people. Okay? They're cutthroat. You want to know why Stephen Cohen gets fined? Because he cheats. But why? Because the fines are less than how much he makes. Right? These guys are cutthroat. No joke. Okay? So if you want to go out there and actually make money in the trading world, you need an education. All right? And you're not going to find a better place to get it than at Live Traders. You want to travel around the world, even if you're not making $1 gazillion a year. Okay? But you want the freedom and flexibility to not drive in rush hour or to be able to take off when you want to. Okay? I mean, I went to my daughter's school. She's 8 years old. I went and had lunch with her yesterday at 11 o'clock in the morning. Who can do that at a 9-to-5 job? Hey, excuse me, boss. I need to leave. I want to go have lunch with my daughter at school. Brought her some Chick-fil-A, and we just had lunch, the two of us at school. Who gets to do that? Okay, my wife's Japanese. I spend 6 weeks in Japan every summer. Okay, I have a house in Pennsylvania. I spend 2 months there. Who gets to do those things? You don't in 9 to 5. Your boss tells you when you can come and go, all right, how much you're allowed to make, all right, if you're dressed proper today. It's ridiculous. Working for the man is no fun, okay? I'm going to make one other comment, guys, okay? In the beginning of your trading, I would recommend you keep your current day job, or you have a spouse work, or you have a fat savings account, okay? Because in the beginning, you're not going to make money. All right, first few months, 6 months, whatever, you're not going to make money. Okay, most likely you won't. There are some people that do, all right, but the majority don't. You're just learning at that point. It's like you go 4 years to college, spend 100 grand, 200 grand to do it, and then you come out making 40 or 50 grand. It takes a while to make that money back, doesn't it? Right? So those are the types of things you have to keep in mind. Guys, you're not going to get a better offer than this. $18.97, guys. Okay? 460-page digital manual, 16 hours of recording, unlimited retakes. We have a monthly pro webinar series, okay? It's 2 hours long, and we go over things like I talked about today, but even in more detail because it's 2 hours. Comes with a trade tracking spreadsheet, gap scanner, a month of our swing newsletter, just if you're interested in swing trading, email and text support from myself and from Anmol, a free month in the chat room. Okay, a signed book, the PTS manual, this book back here, okay, I'll give you a signed autographed copy of this thing. It's the best book in the business, okay? I am telling you emphatically, you will not, absolutely, I'm guaranteeing you, if you don't think so, I'll give it back to you, okay? That is the best book in the business, okay? And this one, this is something that, I'm not really down with this, but whatever. Priority registration and 10% on the next mentorship. All right, give you 10% off the next mentorship. And I'm not really sure why you're crazy enough to do that because we have a waiting list from the last one. Okay, $18.97, guys. Normally you'd pay about $4 grand for this stuff. All right, Now, some people come in and go, oh, that's BS, another guy trying to shill something. Look, man, you can go out in the market and do it yourself, all right? And you can tell me how far your $1,897 goes after trade fees, commissions, SEC Section 31 fees, platform fees, and tell me how long that lasts you, okay? All right? Tell me how long it lasts you, because it won't, all right? I get it all the time. People doing this, people doing that. It is what it is, okay? I'm good in life regardless. It's just a matter of how serious you are about your own trading, okay? Come in, take the course. First couple days after the course, you chill out, you relax, and then you start building your trading plan, and you start getting serious about trading, because that's all we are here at Live Traders, is serious about trading, okay? And I'm going to do one last thing, guys. All right, what's the software that your trade room uses? We use Omnovia. It's actually, I think it's Webinato now, but yeah, it's Omnovia Pico. I'm going to do one last thing here. All right, I'm going to drop this from $18.97 to $15.97. Anmol, can you make that happen, please? I don't have the capability to do that at the moment. I know I threw you off there for a second, but please make that happen. Drop this from 18 to 15. $15.97, but that's only good for 24 hours. Tomorrow by 5:30, that's it. $15.97. Okay, that's the cheapest we've ever offered this, ever. We actually, like I said earlier, we don't do these webinars, okay? Last one I did was a year ago, all right? So I guess we'll just keep doing one a year, I guess, right? You change it to the first 5 people? Okay, right on. Okay, you can contact us at info@livetraders.com. The number is 800-947-4027. If you want to be a successful trader, start small, be disciplined, be objective, and stay consistent, okay? Otherwise, you're going to be a failed trader or an ex-trader, or both. You can email me at jared@livetraders.com if you have any questions or comments, okay? All right, so I appreciate the time, guys. Thanks for stopping by, and we'll see you guys next time. All right. Take care, guys. Have a good one.